Hi guys, we're going to start back here with question number 4. Okay, so if you watched the other video, I did questions 1 and 2 on that. Okay, I'm going to do question 4 here, and then you're going to do question 5 on your own. I'm not going to go through it. All right, so let's read up here the instructions. It says River's Edge Canoe and Kayak is authorized to issue 10,000 shares of $100 par preferred 9% stock and 500,000 shares of $5 par common stock. The following balances appeared in the balance sheet section of the company's worksheet for the year ended December 31st. So what that means is all of this stuff is what it looked like on the last day of the year on the worksheet, okay? So we don't know the first day of the year, we just know the last day of the year right now. All right, number 1 says, prepare the statement of stockholders' equity. The totals will be automatically calculated. All right, so during the period, the corporation issued 500 shares of 9% preferred stock at par, okay? And we can see par up here for both of them, and 25,000 shares of common stock at $9. So it looks like they were issued above par because the par is just $5. The net income for the year was $425,000. All right, so up right here on our first line, we are going to have our balance on January the 1st, okay? We're not going to put anything on this line yet because we don't really know that yet. We know what the balance was on December 31st. We can go ahead and put that on here. Okay, not going to total, it's going to total it, so we can't actually type those numbers in even though we know what those numbers are. Okay, so we're going to have to get those in a minute. All right, so the first thing we're going to put on here is our stock that was issued. Okay, so we're going to go ahead and we're going to put our 500 shares of 9% preferred par, and we're going to put our 25,000 shares of, there it is, of common at $9. Okay, so let's go through this. So right here, it says $100 par 9% preferred stock. We're going to go ahead and put that one on here. So we need to go ahead and get our calculator out. Okay, and we're going to figure out what that one is. Okay, so we are going to take our 500 shares times, and it says that it was issued at par, and the par is $100. So times 100, and that gives us 50,000. Okay, so right down here, we're going to put 50,000. Okay, and we're going to also put it over here as our total because there's nothing else to put in that row. So 50,000 right there also. All right, next we're going to do our 25,000 shares of common stock at $9. Okay, now if this was offered at $5, we would just have to put it here and here for our total, but it was offered at $9, so we've got something extra to put right here. Okay, so first let's find this first one. All right, or actually we're going to find this number right here first. All right, so it is 25,000, okay, because I'm getting that from right here, 25,000 shares times, it says at $9. Okay, so that gives us 225,000. Okay, so 225,000. Okay, again, 2 ways to do this, just like on the other problem. You could subtract it out for the par, or you could just figure both. Okay, so I'm going to go ahead and just figure both. All right, so at par would be 25,000 shares times the $5 par, which is 125,000. And then I could just subtract out what 225 minus 125, or if you really wanted to do it, you could just figure out $9 minus the 5 gives you the $4 in excess times 25,000, and that is 100,000. Okay, as long as those two numbers add up to equal the total, then you are good. Okay, also notice we're calculating some things down here. Okay, so what else needs to be on this next line is we've got to have our net income on here. Okay, if you had net loss, you would put net loss, but we have net income, and it tells us that our net income, which is retained earnings right now because we haven't paid anything out, is 425,000. And I got that from right here. Okay, so my total right here is 425,000. Okay, so it's like I said, it's retained earnings because we haven't paid anything out yet. But now we're going to pay out some cash dividends. Okay, all right, and we know that because we can look right up here and we can see that we have some dividends. We have some common and we have some preferred. So we're going to pay both of those out right here. Okay, all right. So the first one we're going to put, just like we started with preferred up here, we're going to start with preferred down here. So we're going to just go and find the one that says preferred stock. And then right here, we're going to go and we're going to find the one that says common stock. Okay, so we're going to do our preferred first. All right. It is coming out of our retained earnings. So the preferred is 45,000. So it is making it go down. So it's going to be negative 45,000. Okay. Remember when you type in negative, it changes it to a parentheses in accounting. Okay. So it's going to be negative 45,000 because we are paying it out. Okay. Then our common stock, 262,500. We're paying it out. So minus 262,500 minus 262,500. Okay, so we're paying those out. So we have some balances down here. Okay, our balances aren't quite right yet because we don't have a balance up top. So now we need to go and we need to find our balance up top. Okay, I'm going to find that. So I'm going to have to read up here to see what they were. So preferred stock, it should be on December 31st, the balance should be 500,000. Okay, so what do I need to add to this 50,000 to make this 500,000? I need to add 450,000. Okay, so I've got that right so far. All right, our common stock should be 750,000. So what do I need to add to that? I need to add 625,000. Okay, so now I have that one correct. Okay, moving on. We need to figure out what this one would be. I'm going to look right up here again. Paid in capital in excess of par is 300,000. So my balance on January 1st must have been 200,000. Okay. Next, my retained earnings. I need to look up here. I'm going to get my retained earnings just from this exact spot because this was considering that my net income and my net income had not been added and my dividends had not been paid. So I'm just going to put in that 735 right there. All right, and then to get my total, all I need to do is I need to add everything up. For 50,000 plus 625,000 plus 200,000 plus 735,000, oops, and I get 2,010,000. All right, so I have everything correct now, okay? All right, moving on down. Now we need to prepare the balance sheet, okay? So remember when we're preparing our balance sheet, we're gonna list all of our assets first. Okay, so I've got my cash in bank. Always do it in the same order that we've always done it in. I've got my accounts receivable, notes receivable, merchandise inventory, prepaid insurance, supplies, delivery truck, and store equipment. All right, so let's go see what those balances are. So basically, I just went in order, in case you were confused, I just went in order of this right here. So I'm gonna go put all of those amounts in there. Okay, so I'm taking this information and I'm putting it down here. Okay, so I've got 506.10 for my cash in bank. Notice just put them all here and it adds them up and puts it on the right. My accounts receivable, 850, 680. My notes receivable, 400,000. Merchandise inventory, 388, 815. Prepaid insurance, 3,600. Supplies, 10,500. Delivery truck, 139, 298. Store equipment, 363.9. Okay, for my total assets of 2,661,000. $5,912. All right, now my liabilities. I'm going to go back up here the same way I did that. I'm going to put my account payable of $62,412, my dividend payable. I'm going to put all this on here. I'm going to go ahead and pause and get all that typed in, and then you can just look and make sure you did it correctly. Got all my liabilities typed in. Hopefully yours look like mine. I just pulled it right from the top. If I did it correctly, my total liabilities should have added up to be $259,412. Okay, next up is my stockholders' equity. I've gone ahead and put these in, my 10,000 shares that are authorized. So that doesn't mean they were issued yet. They were just authorized, but I need to go ahead and put that in there even though I'm not going to put anything on the lines. And then my 5,000 shares that were actually issued. Okay, I can look up here, my 5,000 shares that were issued. And so it's right here, 500,000 is my balance. So I'm going to go ahead and put in 500,000 right there as my balance. Okay, common stock, I'm going to do it the same way. I'm going to put down my 500,000 shares that were authorized and then my 150 shares that were issued. 150,000 shares that were issued. And then I'm also going to have to put on this one my paid in excess because some were above par. Okay, so I'm going to put those on there. I'm going to put in the 750,000 and the 300,000. Okay, and I just got those from right up here. Okay, all right. Now I'm going to put in, retained earnings. Okay, so I'm going to go look up at my retained earnings and it is $852,500. So I'm going to go down here and I'm going to put that in. All right, so my total stockholders' equity is $2,402,500, and my total liabilities and stockholders' equity is $2,661,912. Okay, so just make sure that your assets equal your liabilities plus owner's equity. Okay, which right here, adding those two together, it does. Okay, identify the total stockholders on December 31st. Identify the total stockholders' equity on December 31st. All right, so my total stockholders' equity on that day is just this number right here, $2,402,500. Okay, so hope you did that problem okay. For question number 5, I'm going to let you do it on your own. I feel like you have all the information based on that last problem that I did that you can do it all on your own. So you're going to be filling out the general journal right here, and then you're going to be doing a partial balance sheet and then answering that question right down here. Let me know if you have any questions, guys.